JJ the CPA here. We're going to talk about construction costs under the new tax law that went into play in December 22nd, 2017. Here's the deal. If you're building a building, you're buying a building, you need to get with a CPA. This is not something you want to try at home. I'm here in Chicago. There's construction going on behind me here on a huge high-rise. So we're going to use that as a simple example, if you will. So when you're building new construction, everything that's being built, the foundation, the walls, the structure, the steel inside, the roof, everything that is considered is the shell, right? You cannot have a building without any of that. That is going to be 39-year property. What that means is you're going to have to depreciate that over 39 years. Now, when you're looking at the inside of the building, so if you can see the building beside me or behind me, you can see that the insides, the guts are empty, and most likely what's going to happen is the developer of this building will build the shell, all the flooring, and then the main walls that have to support the building, if you will. But then whoever moves in, those are going to be improvements. They're called leasing improvements. And you can have, in essence, these kind of improvements even if you're not leasing it out and it's for yourself. So here's the thing. Focus in on this. If you're building a building, you want to complete it and finish it so that it is to the point of having a certificate of occupancy, which just means that it's safe. And then under the new law, the next day, anything that you do on the internal, you'll be able to write off under a much shorter time span. Now listen to this. The new tax law that went into play, there's a typo, there's an error. It needs to be fixed. As of July 2018, it has not been fixed. So you want to get with your CPA, but once it's fixed, that amount of cost in the leasehold improvements will be depreciated over 15 years. But more importantly, because it is in that class life, you'll be able to, under the new tax law, do bonus depreciation. And under the new tax law, the bonus depreciation is 100%. So this is not something to monkey around with. You want to do it properly, because you could be in a situation unprecedented in the United States of America that you could be writing off 100% of internal improvements, if you will, if you do it properly. You've got to get with your CPA, make sure you're aware of the law, and then make sure you're tuning in for future videos so that once this new law goes permanent, we're going to be telling you all about it. All right, hey, thanks for tuning in. And if you like my video, I'd love it if you'd hit subscribe. Please do. And then don't you ever forget, you've never met a CPA quite like me. Get the